So when you look at these Black Swan events, like the Black Monday in 1987, followed by a high inflationary period, or you look at that 98 to 2022 scenario with the dot-com bubble and the global financial crisis, two Black Swan events in that same 25-year period, I wanted to see what would come out ahead, in terms of providing the most stability, the most confidence, but also having a higher ending balance so that if somebody had a legacy goal that they want to fulfill, that they could still do that and that they weren't compromising. So this is that's really what an optimization is about, is not having to compromise in one area, but still getting all of the benefits. And in this case, those benefits are going to be, better risk mitigation, more confidence, more clarity, and overall, uh, more peace of mind that you can truly spend what you need to spend to sustain your lifestyle. And none of the uncontrollables of the markets can influence how you feel because it's independent from those uncontrollables.
That's right. Yeah, and we're giving you a couple examples here. You see the one to the left, which, like we had mentioned, that one focusing on the Black Monday event. Then the one to the right from 1950 to 1974. That's post World War II bull market, followed by the downturn. We're seeing in both situations the results sort of speak for themselves.
Yeah. So the next term here, 1950 to 1974, I wanted to also have it tested against one of the strongest bull runs in our history, and that was the post World War II event. And then I wanted to also include that Black Monday still in that, or not Black Monday, but another market drop, which was in the early 70s. And I wanted to show that just to prove that regardless if we have a really strong market in the beginning or a flat market or a really challenged market, that regardless of the scenario, the guaranteed annuity comes out ahead when combined with 100% stock. So again, risking off to risk on is a far more optimal approach to all of these market scenarios that we've tested this in. So, the results are consistent here. Again, alluding to the fact that, the annuity strategy with 100% stocks in the remaining portfolio outperforms the traditional withdrawal method, especially during volatile times. So we never know exactly what is going to happen in the future. Nobody has a crystal ball, but what we do know is that if we can take these plans and compare them head to head and have that Western showdown to see who's going to come out as victorious in all of these historical timeframes, it's a true testament to the power of that plan, and knowing that it's gone through some of these more difficult times and some of the most difficult times in history, those volatile periods that we just covered, and yet it's still ahead. And there's a lot of other amazing benefits to this type of plan that far exceed, in my opinion, just the economic benefit.
Yeah, I think you really hit on it when you mentioned psychonomics. I mean, when we think about how this affects us day in and day out, of the thought process that we go to of what does retirement look like for me? How am I going to manage it? And upon those retirement years, no longer working, we've got more time. So does that question becomes, is that going to eat away at somebody over time, the more time they have available to think about monies in the market?